Good evening. My name is Tahir Qureshi. I'm a fellow of Royal Institute of Canada and broker of record for City Pro Realty Inc. brokerage. Tonight, especially episode I created for first mastering the first-time home buyers process. So this is the most expensive decision a family makes to buy their first home. So I'm going to go directly to the presentation and explain you the process. And then if you have any questions, then you can call me after the presentation. Okay, let's go there. So mastering the first home buying process, sponsored by City Pro Realty. I'm a host of and founder of Realty Coffee Talk and Institute of Online Learning. So your roadmap to home ownership. So buying your first home is one of the most exciting and significant milestone in life. It also can be overwhelming, complex, and fraught with financial jargons. But with the right preparation and knowledge, you can transform this daunting task into a smooth, confident journey. Mastering the process is not about knowing everything. It is about understanding the key steps and making informed decisions. So here are your step-by-step roadmap for becoming a savvy first-time home buyer. So in phase one, we're going to talk about the foundation, preparation, and planning. It takes about 1 to 3 months. The most critical phase, solid preparation here prevents heartbreak and financial stress. So it's very, very important. Number one, conduct a financial health check. This is the key. Before even you look at listing, look at your finances. So what you need to do, step one, is check your credit score. Your credit score is your financial passport. It directly impacts your mortgage interest. Aim for a score 740, higher. Sometimes 650 plus will be okay, but it's better to have 740 and higher for the best rate, because bank will calculate the risk associated with the person, and therefore they offer you a better rate if your score is high. Check your report for errors and dispute if necessary. So in Canada, we have Equifax and as a TransUnion. The both are separate, but you should subscribe or at least buy one of these reports for both of them to make sure there is no discrepancy between the two, because some bank will use TransUnion, some will use Equifax. You want to make sure the both you have. It's going to cost you maybe $25 each, but it's worth it. Take it and then compare them. If there is any discrepancy, you can report them and get it corrected. Number two, calculate your debt to income ratio. This is DTI. Lender use this to assess your ability to manage monthly payment. It is your monthly debt payments, including your future mortgage, divided by your gross monthly income. A DTI below 36 is best. Okay. And I'm going to put this up there. And it's ideal. Though some loans allow for higher. Most cases, bank will allow up to 40% before they put you into a high risk area. So get your, let me move this down here. Get your pre-approval for a mortgage. Number two, this is very, very important. This is your golden ticket. A pre-approval is a lender's commitment to loan you the specific amount based on a verified review of your finances. This is very, very important. It's a prerequisite to determine how much you qualify. It helps your real estate agent to find the property within that budget. Okay? Why is crucial? It shows seller, you are serious, qualified, and you are a qualified buyer. In a competitive market, offer without pre-approval or offer ignored. If that means the buyer is not prepared. So to make a seller comfortable that you are pre-approved, subject to inspection appraisal of the property, you are pre-approved because you are well prepared. So this is very key for you to get this done. Number two, how it to do. Shop around with multiple lenders, bank, credit union, online lenders. As you know, I am also principal broker of Canada Express Mortgaging, FISRA license number 13241. So I can guide you. I am also real estate broker of record and president of City Pro Realty. I can take a real estate and the mortgage, both. I can advise it. Without license, you cannot even talk about it. So to compare rates and fees, because if you are a prime client where you qualify with conventional mortgage, there is no fees involved. But if you are part of a client or a borrower that fall into B category or loan to value is high, then you may be go to alternate lending. So this is very important that you negotiate based on your condition. Do not just focus on the interest rate. Ask about origination fees because some B lender will charge you fee. And this is very important that you look at the comprehensive package. Discount points and other closing costs. This is not only you are buying a property, you also have to consider the financing cost. Number three, you also have a closing cost. The closing cost approximately, excluding Toronto, is about 2% of the purchase value. So you have to keep in mind in your budget. This is very, very important. Okay. Okay. Number three, determine your budget, the real budget. Because when you are buying a property, you're thinking of buying a property, the bank may pre-approve you for a large amount, but you need to determine what you are comfortable paying. They can allow you, they can approve you more, but can you handle it? And this is why it's very, very important for you to check it out. The 2836 rule, a good guideline is that your total housing cost, mortgage, property taxes, insurance, should not exceed 28% of gross income. And your total debt payment should not exceed 36%. So we have a little bit of variation in Canada. We use 40% for GDS, gross debt service, and 42 as a total debt service. So there are percentages changes depending on the institution you are dealing with, whether it's a private or it's a private or a traditional bank. Now, the factor in hidden costs, this is very, very important because you are preparing a budget to buy a property. So factor is in hidden cost. Remember to budget for closing costs, typically in this case 2 to 2.5%. 2 to 2.5% depends on it if you are commercials and other issues, or you are buying a property in Toronto where there is a land transfer tax is double. One is for the city, one for the municipality. So there is very, very important that you understand that. And this is 2 to 5% of the purchase price, because if you go to Toronto, you're going to be double. And remember, the first-time home buyer may have a $4,000 discount towards their first time buying the property. So it's very, very important that you know that. Moving expenses also cost, because if you're moving away from a different city, there's a lot of handling cost. Immediate repairs and furnishing. If you selected a property that requires a lot of the work, that you may have to do the repairing, and you need or furnishing of the house. If you are moving from a smaller to a bigger house, you need a lot of furnishing, or you want to do some major changes. So ongoing maintenance. A good rule is to save 1% of your home's value annually for repairs, because depending on the size. So this is an estimation. That means you should budget this in your budget when you're buying it. Now, number 4, define your must-haves versus nice to have. This is very important because it's going to determine your outcome and how much you can afford and you carry it, because this is very, very important. If you can try to mix up these two, you're going to end up with escalating your budget and you're going to go out of the budget. So why? Be realistic about what you need versus what you want. What is a necessity? Well, you got to have. You have to have, must have, and nice to have. So must have, non-negotiable. That means you can negotiate on them. That's the number of bedrooms, location, budget, yard for the dog. These are the must have. You can't compromise them. So when you are dealing with a real estate professional, you put in the BRA, buyer representation agreement, or designated buyer representation, what you must have, what you're buying. Lots of people don't put that in their representation agreement. So when you're dealing with a real estate professional, you put it in your agreement. Therefore, your realtors know what you need. Nice to have, desirable, but flexible. That means granite countertops, a swimming pool, a finished basement. These are nice to have. Granite countertop look nice, but you can change them later on when you buy the property. A swimming pool is a luxury. Unless you have a necessity, you could have put in your must-have. Then it would have been a different story. But it could cost you, depending on $50,000 to $250,000, depends on it. And finished basement, yes, is good to have, nice to have, but it costs money. And especially if you plan to rent it and you want a legal basement, it's going to cost you more money. And you know, I am a founder and president of Tixon Construction. Is ICRA licensed builder, B63247. We are able to help and build your legal basement with a building permit and get your occupancy permit. And this is good to have, not finished basement, because you can customize it according to your needs or for the family use. This list will keep you focused on prevent emotional decision on house that does not truly meet your needs. So that means it keep you focused on what is required and what you must have and nice to have any features. So let's evaluate now phase 2. Hunt. I think the misspelling. Find and evaluating your home. The hunt. The H is missing. So 2 to 4 months. Number 5, assemble your team. This is so critical. You do not have to do this alone. A good team is invaluable. A great real estate agent. Find an agent who specializes in your target neighborhood and has experience with first-time home buyers. They provide market insight, negotiating skills, and will guide you through the paperwork. Recently, I did a first-time home buyer bought a property. Amazing 5-star rating I got on Google. So you can Google citypro.net, Realty Inc., and you see the 5-star rating from the first-time home buyers. This is very, very important when you have experienced real estate professionals who deal with it, because they need to walk through them step by step to make sure they are happy and successful. Okay, just moving it here. So a mortgage agent, second is a mortgage lender. You have already pre-approved with one, but keep them in the loop. A real estate attorney, if you require in your if you require in a state transaction, the real estate attorney, if required in your state, they manage the contract review and closing process. This is very, very important for you to have this team. So basically, you have a real estate agent, you have a mortgage agent or a lender, you have an attorney, and you have a home inspector, and many other things, teams that you are forming before entering into a transaction. Number 6, the house hunt is on. Now you are, I'm going to put it there, with your agent, start viewing property that fit your criteria. Now you have created a budget, you have criteria, and you're looking all those things. Basically, you have already fine-tuned it. I want to mention here, in Ontario, there is a law. It's called Trust in Real Estate Services Act. There is a regulator, it's called Real Estate Council of Ontario. They have introduced a RICO information guide for residential and commercial. So it illustrates you how when you engage with real estate professional, you enter into an agreement, a representation agreement, if you want to be represented by a brokerage or a real estate agent who work for the brokerage. Either you can designate a person with name that this person will perform with that brokerage, or you can be a self-representative party. So this is very, very important for you to know that. Now, look beyond staging. When people are looking for, they see past fresh paint and clever decor. Focus on the home structure, layout, and natural light. Don't look at the cosmetic stuff. You look at the really a good bone of the building, layout and nature light, because it reflects very good when you're buying a property. Now, check everything. Test faucets, flush toilets, open and close windows, and look for signs of water damage or foundation cracks. This is a essential thing that you can observe during visit to the property with your agent. Now, explore the neighborhood. Visit at various times of the day and week. During the day at time, you see, look at the traffic and rush hours, and you see how much is the traffic. If you're small kids, you want to make sure that is a safe street for you or the neighborhood. And check also commute times, because sometime in the morning, a lot of people leaving, a lot of people coming, and noise level. Is there a lot of traffic? There's a noise. It disturbs your family and kids. And also, most importantly, amenities to the proximity to the amenities. You have a community center, fire marshal, clinic or hospital, other playground, parks, a library for your client. And this is the thing you want to check. And you come various timing to make sure that this is how you are dealing with it. Number 3 phase, the action, making an offer and closing the deal. It takes 4 to 5 months process. Make a strategic offer. Your agent will run comparable recent sales to help you to determine a competitive yet fair price. When you are buying a property, we call competitive market analysis, you ask your realtors to give you a CMA. So you have understanding about how the market prices are in that neighborhood or on that street where you're trying to purchase the property. See, the offer package includes the purchase price, proposed closing date, and contingencies. Contingencies are clauses that allow you to back out of the deal without penalty under specific condition. So those are, we call them conditional offers. When you are creating an offer, working with a realtor, and you can tell your realtor what clauses that you want. Home inspection contingency, that's one thing. Appraisal contingency or financing contingency. These are the very commonly used. You can also have an environmental. You could have a septic tank. You could have a water well. You could have a requirement for a site survey and floor plan. If you have planned to build the basement, legal basement in the future, you will need a site survey stamped by a surveyor of Ontario. And also you need the floor plan. Otherwise, you're going to spend money to have somebody make it for you. And especially when you trying to legalize your basement, if you need to do any changes to the house, this is very, very important for you to know. Now, earnest money, this is very important. This is a good faith deposit, typically 1 to 3% of the sale price, because the deposit under Trust and Real Estate Services Act, it goes to the listing brokerage. And make sure when you're buying a property or you're giving a deposit, the company who has listed the property is licensed, they have a valid license, and it is, you can go to rico.on.ca to verify the agent name and the brokerage name. It shows the license number and also the expiry date. This is very, very serious because this money is considered toward closing cost. So therefore, it's very, very important for you to check it out before you give deposit. There is a episode on deposit only. You can go to realtycoffeetalk.com or you can go to www.youtube at the rate of Realty Coffee Talk. There is a specially episode about 1 hour about deposit, how your deposit is protected. And Rico Guide will also tell you this, that your deposit is protected. Now, number 8 is the home inspection and appraisal. This is very, very critical for you to understand. Once your offer is accepted, the clock starts ticking, because now you have a home inspection to do. Do not skip this. Hire a licensed professional to uncover any hidden issues with the roof, foundation, electrical, plumbing. The report gives you a leverage. Either ask the seller for repair, request a credit, or walk away if issues are too severe. This is why it's very, very important. An issue comes in when you have a basement. It appears to have a basement with a separate entrance. It has a second kitchen, but you don't know whether there was a license or not. Did the basement was finished with a legal permit? Was a occupancy permit obtained from the municipality as a second dwelling unit? You know this, how critical this is to use a home inspection, because it will refer you to go to the site, find out from the city if they have the building permit or not. If they don't have building permit, you don't have it. And on the other side, the agent normally disclose that they use form 299, disclose the latent fact that there is basement done by the seller without building permit. So these are very important for you to have inspection done. Therefore, you will not make any mistake when you are doing a due diligence. Most important thing is also appraisal. Your lender will order an appraisal to ensure the home is worth the loan amount. Normally, this happens when you are dealing with the conventional mortgage, which means 20 to 80%, and you're not going with the high ratio mortgage because your LTD is higher than is less than 20%. So it will go to CMHC for guarantee, because bank will not take a risk, and they will go to the government of Canada to give you the difference and protection. But when they go to 20 to 80 ratio conventional mortgage, there is no protection for the bank. They are taking the risk. That's why they do appraisal. And it's very, very important why you put that condition in your agreement, is that what happens if your appraisal comes lower than what you agreed in the agreement of purchase sale, and how you're going to handle the difference. If the appraised value comes less, you need to renegotiate with the seller or produce the different cash in cash. That means significant difference. A lot of people who have bought the property 2 years ago and then now they're closing, the value has gone down. They have a difficulty to close the deal, and this is why this appraisal. Not only appraisal is done by the bank or lender about 10 days before the lending the funds. Now, this is also very important. Number 9, secure your mortgage approval. Submit any requested documentation to your lender promptly. When inspection is done, everything is done, appraisal is done, they will process your file, underwrite the loan, and issue a clear to close once everything is approved. Remember that. Do not remove the conditions until you have firm commitment from the bank. Because once the firm commitment is from the bank, they will not withdraw because they have obligations to make sure that you are given the funds in closing. Number 10, in this case, is the final walkthrough and closing. The final walkthrough closing, conduct this within 24 hours of closing. That means you go back with your client, go ask your realtor to take you back 24 hours before closing. Verify that the home is in the agreed upon condition, that all requested repairs have been done. So if you have an inspection done, they identify some major concern, and then you put the clause there, we will inspect this before the closing. So you do the final walkthrough. Don't net on this. It's very, very critical. Go through that. And this is very, very important for you to do it. Even if you don't have an issue, I would still want you to go and do this walkthrough, because this is important to make sure when you negotiate the price, sometimes it takes 30, 60 days, something had happened. You want to check everything is intact before it closes. The closing settlement. This is where you sign a mountain of paperwork, officially transfer funds, and get the key. You will need a cashier's check or wire transfer for your down payment and closing costs. Congratulations, you are now a homeowner, and this is what happens. So this is the takeaway. We're going to discuss that takeaway for mastery. Start with your financing. Knowledge is power. Knowing your budget and getting pre-approved puts you in control. Number 2, your agent is your advocate. Choose wisely and listen to their expert advice. Do not skip the inspection. It is small price to pay for a peace of mind, because there's lots of things happen. They will identify them and you decide. For example, you have an old washer and dryer. Your furnace is going to die on you. Air condition, maybe it's not malfunctioning. Your roof may be leaking, maybe need to be replaced. These are the things that you're going to end up spending the money. So if you don't identify, if you skip the inspection, you're going to end up with a problem and a cost. Think long term. This is not just a house. It's a financial investment and a home. Consider its potential for your future needs and its resale value. When you are buying a property, buy it for a long term, because very important. Very, very important, because market changes. If you own a one property and it's only for a specific period of time, short period of time, you may not have the benefit. So it's very, very important to have a long-term strategy. You have a family needs. You think about how long is going to continue, and you want to make sure that you are able to attend and stay in their property, maintain the value. Some people are buying property, they want to repair and renovate and to live in there. So you can customize it. So it all depends on how you see the property. But property value, based on the historic Toronto Regional Real Estate Board data, you can go to Market watch it. It shows that every 10 years, the value is double of the property. So that means you need to strategize type of home you're buying for a period of time and calculate and cost impact, particularly when you're talking about your, monthly payments. Sometimes affordability is an issue. You may have a 30 years amortization versus 25 year amortization. So because you want to feel comfortable and you live there unless you plan to move. Stay calm. This is a very important matter. Stay calm. Do not rush. We have many programs that we have talked about. The market can be emotional. Stick to your plan and do not let pressure force you into a wrong decision. The right home will come. I have mentioned that you create a budget. You have a bidding war going on. You have a logic. You have a limitation. And based on that budget you created, you stick to that plan, strategy. And don't overbid a price to get a property, because value is the value. If bank will loan you money, they're going to appraise the value after you have firm up your deal, and there will be a shortfall of your home because you went emotionally, you went over budget. Unless you have extra cash, you want to have this property and you do it. So mastering the first time home buying process is about being initiative taking, educated and patience. By following this roadmap, you will not only find a house you love, but also secure it with confidence and financial savvy. Welcome home. So, and my name is Tahir Qureshi. I'm a fellow Rural Institute of Canada and also broker record and president of City Pro Realty Inc. Brokerage. This is the courtesy of City Pro Realty Inc. Brokerage and its team. So I will say thank you very much for following. We look forward to your valuable feedback and collaboration. Thank you very much. Bye for now. You have any questions, Ajil?
No, it was very, informational and thorough. And I think a lot of people will benefit from all the information. And
all right, so we're going to put it in there.